Good morning on this summer Friday. I'm Pete Najarian. This is the Take for Market Rebellion, and I'm excited for all kinds of different reasons. One of which is the markets themselves have been really interesting. I've been watching very closely on this S&P 500 as it's pushed closer and closer to those record highs. Everybody continues to watch it. Is it like watching a pot boil? Maybe that's what it sure feels like, because it gets talked about probably every single day, almost to nauseum and too much. But the reality is it's something that everybody is always looking forward to: new highs, record highs, this, that, and the other. First $1 trillion company, first $2 trillion company, all these different things. And they make a lot more out of it than it really probably should be made of. But still pretty interesting watching the S&P as it's recovered so well from those lows way back in March. Just incredible. Now, the Dow actually had a pretty interesting day where it rallied up near that 28,000 level, got pulled back again, and then in the final hour or so just sort of gave a little bit of a push, but still finished off about 80 points, call it something like that. Nothing big, nothing to write home about, but there was a bit of a push and pull, because then you look over at the NASDAQ, which had been back over that 11,000 level once again and continuing to move and fluctuate there, and actually finishing above that 11,000 level and finishing positive by 30 points. So that dislocation once again coming into play, and that's something that we've been talking about very frequently, and we've been talking about that late push, that final hour. Oftentimes we see some of the significant moves of the day happen in that final 30 minutes or hours thereabouts. So strength yesterday in the Dow itself, well, Apple, Nike, Merck, some of the usual suspects that are pushing things around. The weakness, it really almost comes down to one stock, Cisco, just because of the dramatic move, 11% to the downside. But throw in Exxon, Chevron, Goldman Sachs, and that's why you see a market that was down about 80 points yesterday. So certainly all of that part of the story. Now, when you look at the NASDAQ, the strength area of the NASDAQ, Tesla, ever since that announcement of that 5-for-1, that stock has had a very nice move. Zoom, Autodesk, those kind of names actually powering, at least to some degree, the NASDAQ. There was some weakness out there. Obviously, Cisco's one of those names. Micron Technology, we had Western Digital, Applied Materials, Qualcomm, those names. American Airlines as well. So we've watched the airlines really make an interesting pivot, along with the cruise ships and that whole category. And a lot of that having to do with just, are people able to get back flying, and at what level and at what pace, and all of that, which is obviously a very difficult thing to kind of unwrap. So that's part of the reason why we've seen so much fluctuation there as well. A lot of movement. So the financials, they absolutely lagged yesterday. The semiconductors down about 1%. I just mentioned a lot of those names that were pulling on the NASDAQ yesterday. But the NASDAQ finished positive. So you say, well, yeah, Pete, you mentioned Tesla, you mentioned Zoom, you mentioned Autodesk. How about the biotechs? Now, you take a look over at biotech and you look at Novavax and Natera and Inivio. There's so many different names that were moving to the upside. And these are a lot of the smaller names. I'm not talking about the Amgens and some of those kind of names. I'm talking about just biotech in general. And you see it, look over at the XBI, you see some of these names very equal weighted and a nice move to the upside, about 1.5%. So then you look over at energy, down 2%. You look over at the industrials, down about 0.5%. So you look over at the commodity space, and that was a little bit quiet. It's been a little bit quiet. We had that big pullback in gold, in silver, big pullback. We didn't get that big pullback so much in crude, but all of them sort of just trading around. It's almost like a consolidation period after that massive run and then a pretty decent sized pullback, and now just kind of sitting and waiting. And that seems to be a bit of the theme. Volatility, yeah, it's trading right around the 22 level, and that's where it's very much been stuck with this market. Really kind of, it's been volatile, but within a couple 100-point sort of a spread, which sounds like a lot. But if you just go back just weeks or months ago, we were talking about 500, 800, 1,000-point move type days. Now we're looking at moves where we're up maybe 100 or down maybe 100, and within the same day, it doesn't feel anything like it felt before. Volume was really strong again yesterday. Was it over 30 million? No, but we continue to have some of that strength, and I'm going to get to it in a second, but it's great to see that so many of my colleagues over at CNBC, these guys are finally starting to say, wow, the option space, look at these volumes, look at what's going on. We've been talking about this for a long time, this entire year. 2020, it's been absolutely extraordinary. And even if you go back 2018, 2019, and now into 2020. These volumes have been going up and up and up, and it's been an extraordinary run for a while now in the derivatives market. So this morning, early on, I'll do a quick check. We were down about 120 points early near the open on the Dow. Now we're only down about 50, so cut it in half. The NASDAQ was in positive territory. That was up about 30 points. Now I'm noticing it's pulled back a little bit. It's up, or it's actually down about 15 points. So some movement, nothing really all that concerning right now. But so everybody continues to look at the S&P. Is it going to be able to capture these highs? It's flat as a pancake right now. It's actually down 1 point. So very, very flat. We talk about that volatility. Where are we right now? 22.25. So volatility just kind of holding on. We'll see how that trades throughout the day, as we always do on Fridays, as you start to get that weekend effect to see where volatility is sort of anticipated to be by the time we get to Monday. When I was a specialist on the trading floors, there was a technique I used to use. Rather than adjusting the implied volatilities for all of my stocks that I was a specialist in, I would just set the calendar up one date in front of it and then another one, and go to Saturday in the first 3 hours or so, go to Sunday in the next 3 hours or so, and then towards the very end, then move it on to Monday, and go back and forth. That way I wouldn't have to do as many adjustments, because you're factoring in time, and time is one of those elements. That's why knowledge is king. It's why you want to know how the options mechanics really work, and that was just all part of that without having to adjust and then readjust come Monday. So I heard Mike Santoli today, was one of the guys who was on TV, and he was talking about, he goes, options looks like the place to be. Look at all this huge movement. Now you've got this split. What is that going to mean does that change anything for Tesla? Well, we all know that it really doesn't, but it does create more opportunity for folks because of the fact that it does change the premiums absolutely on a $1,000, $1,500 stock, and you cut that down in 1/5, that does change things dramatically and offers at least opportunity for people specifically in the options market, in the stock market as well, but specifically in the options market. And oftentimes you'll see even tighter spreads as you start to see some of those types of things happen as well, because the dollar value has become something that's at a different level, and that gives you the opportunity to have a little bit tighter markets as well. So a lot of different mechanics that go into that whole thing. So today, looking at the Dow, collective selling, I wouldn't even really break it down necessarily into a specific industrials or financials or any of that, but just collective selling generally in the Dow itself. And it's down now about 70 points, so it's kind of catching back up to where it was earlier. But it's Raytheon, it's Chevron, it's Disney, it's Exxon, and those kind of names getting pushed to the downside. The only name that really stood out to the upside when you're looking at the Dow early on, take a look at Intel. For whatever reason, Intel actually is one of those, and I do actually have a reason, but Intel definitely does stand out. It's definitely the outperformer right now of the Dow. Then you look over at the NASDAQ. You see Applied Materials, you see KLAC-Tencor, you see NVIDIA, you see AMD, you see Tesla, you see Zoom, you see Netflix, Activision, all those kinds of names moving to the upside. What you're not seeing, and what is a little bit of a drag, airlines, casinos, cruise ships, those are just not having a great day and not necessarily performing with the rest of the NASDAQ that was positive early on. Now, as I say, has turned a little bit to the negative side. So the semiconductors, they're up about 1% today, and Applied Materials is one of those names that stood out for me today for unusual option activity, because we don't see this. We do see this name frequently, but not to this degree. This is a stock that was flying in the pre-market, moving up to the upside, and now, after reporting earnings that were a nice solid surprise probably for many, there was some call buying in front of that, but with the stock trading around 69.25, Applied Materials 6,800 of the August, which expire next week, so this is a 1 week option. The August 70 calls, they're paying about 60 cents up to $1.25. So depending on where the stock is at the moment, those are the prices that we were seeing in terms of the buying prices. So the interesting thing here, however, is there was already buying of options going into this Friday. So we've already got that. There's a lot of open interest there. This looks to be adding to that open interest, because these are buyers of the Applied Materials options and getting 1 week for these to perform. So again, we bring this up all the time. We talk about short term. This is definitely on that category of short term, because they've got 1 week to perform. Folks, I love our guys at Market Rebellion. They're the best educators in the business. You got to listen to them. I bring it up all the time. I say knowledge is king, and it's all for the right reasons. And you are in the right place. If you're a part of Market Rebellion right now, you're in the right place. This is the take. We talk about this. We kind of skim over some of these things, and you've got to acquire that knowledge. And hopefully you do, because if you get the knowledge, you have a much better chance for success. There's no doubt in my mind about that. Have a great weekend. I am on the halftime report today, so I'll see you soon. I'm not in my shirt and tie. I needed to get that on. And I will be on the 5 o'clock show as well with Melissa Lee. So I'm looking forward to that with the 5 p.m. Fast Money Crew. See you guys. Have a great day of trading.